your income is not always fully counted because of your write-offs. So I make the joke a lot that accountants and mortgage brokers ain't usually friends.
Hello.
Hello again.
All right, you're gonna have to speak really loud, Paul.
Okay, sounds good. I will.
Awesome. Hey, so thanks everyone for joining in. It's your Vancouver realtor, Cari Mai here, and today I am hosting Paul Davidescu, who is a mortgage broker and also a fellow entrepreneur. He runs also a digital marketing firm in Vancouver. So I thought, what better person who has an entrepreneurial background to discuss what entrepreneurs and business owners need for mortgages these days.
Quite the topic these days.
All right, so Paul, we're gonna let you take it away. I have a few questions that I have compiled from common questions just from my self-employed and business owner clients, and I thought you'd enlighten them with your expertise and some of the files that you've dealt with over time. Okay?
Happy to. Thanks a lot.
All right, ready? So the first question is, what do you need when you're applying for a mortgage as a self-employed individual or a incorporated business?
Great one, by the way. So when you apply for a mortgage, being self-employed and or being under an actual corporation, there's a bit of a difference between that. So first of all, most of you, whether you're a realtor, a consultant, or let's say any kind of freelancer, you will be self-employed. So what you need for that is you need 2 years of full T1 generals. So make sure you have those filed and ready. You also need a statement of business activity, and that's going to be on your T1s. So make sure your accountant has that properly done with you, because you'll get questions about that from your lender. You need 2 years of your personal notice of assessment, so your NOAs, very important. An actual business. Stall there. You're gonna need an actual financial ledger. So your account has to prepare actual audited financial statements. The lenders will ask for that, and we'll talk about later on why you would want to. But for now, just know you need to definitely have those audited statements. And in some rare cases, you'll need for the last 6 months. And that's usually done when you're stating your income or when you need an exception, which a lot of people are doing these days. Again, I'll explain that soon. That's kind of, basically self-employed versus an incorporated business. Just the documents you need. Those change all the time, so always check with your broker.
Got it. Yeah, I mean, mortgages change so much over these days. Especially during this time. So it's always good to know exactly what self-employed folks and also businesses need at this point in time. So I always get the question, Paul, from some of my self-employed clients that always ask, hey, how come my self-employed income cannot be counted like a salaried income? And when they ask that, they're thinking about their friends who have a lower salary than them, but they have a higher borrowing power. So they're thinking,
that's not fair.
How come I make more money but can't borrow as much as them?
And you take all the risks too, right?
Yeah.
Yes, 100%. So it's a common issue, and the short answer is basically your income is not always fully counted because of your write-offs. So I make the joke a lot that accountants and mortgage brokers ain't usually friends. Different incentives, right? Obviously, a smart accountant will have you write off as much as possible. I know offline we talked about gift cards, Cari and I, that you may say it's for a client. Hopefully it is. right? There's a lot of things you can write off, but the where it kind of bites you is that when you write something off and your notice of assessment is a little bit lower because of the write-offs, the banks say, great, well, looks like we're going off your notice of assessment and you have, instead of 100,000, you make 50,000, because you can't double dip. You can't just write off your expenses, not pay taxes, and then qualify for a mortgage, right? Like, they're all sort of talking. So that's the balance you have to make, especially, when you're applying for a mortgage as self-employed. So it's not that so much that they're ganging up on you or that there's like a general disadvantage of being self-employed, but they'll look at your notice of assessment. That's kind of the plain and simple version of it. Moving more into that too, a large part too is, and now that you kind of understand the income portion of it, where's your income usually needed? There's your ratios. You might have heard your broker or your realtor talk about your TDS ratios. I won't get too much into that. These are your debt service ratios, and basically, it's a really simple formula around debt over income. And that has to be 44% or less usually, right? So obviously, if you have a lower income, then you're qualifying for less. So you have to really that. The other part as well, actually, is that, remember, I think it's about 96% of small businesses in Canada, that's 1 to 99 employees, they fail in the first year. Banks know that. They look at that religiously, right? Unfortunately, not many of them will interview as an entrepreneur and be like, oh, Cari's got massive potential. She'll be the numbers, right? They're pretty, which I don't fully agree with, but I also understand. So because of that, they want to see 2 years of actual business activity. And what they'll do is they'll average your last 2 years of income, generally speaking. Right? So you've got to be around for at least 2 years. You've got to prove yourself. You've got to be sort of not part of the 96%, basically. And then, you've got to make enough income. So it really is tough, right? You've got to be in business for a while. You can't be writing things off. Odds are really against you in many ways. But, if you're smart about these things from the get-go, then, there's ways for you to combat this. I will say one more thing. I just heard about it today, and I know the CMHC insurer has gotten a lot of flack the last week because of tightening restrictions. One thing in their defense, a program I found out about that only they do. Remember, this is the insurer that is insuring your mortgage, assuming you pay under 20% down payment, right? They have a program called the Self-Employed Enhancement Program, and it kind of makes an exception around the 2-year rule. So for example, I'll give you 2 scenarios. You've been at med school, paid a lot of money, and you've learned a lot. You're totally ready to make money. And of course, usually you have to bill as a billable. You're kind of technically a contractor, right, as a doctor. So instead of having to wait 2 years of doing that, they will sometimes make an exception. And if they see that what you learned before has given you enough practice to what you're now going to make, a lot of money in, that rule can be exemplified, which makes sense too, because of course doctors make a decent amount of money. That's one thing to keep in mind. Secondly is if you are, let's say, a marketer and you do a lot of marketing for a marketing agency and you're making X amount of salary, then you decide to be entrepreneurial and be a contractor or freelancer. Sometimes they will allow you to use the income you made at the agency as long as you can show that it's reasonable that you'll be making just as much, because a lot of the clients, for example, followed you out, assuming you didn't violate your NDA or your non-compete.
Interesting. I didn't know that before. Learn something new every day. Awesome. So that kind of leads on to our final question today. I know you touched on it a little bit, Paul, but then the question is, okay, well then how can I show a higher income on my personal or my corporate income tax return if my income is like this? It changes year over year.
Totally. So number one is, again, going back to smarter accounting. Have your mortgage broker and your accountant communicate and find a good balance in taxes, but also how much that affects your affordability. So basically write off a little bit less, especially if you're looking for home the next year or so. Pay a bit more of the taxes, but write off less, because it really can make a difference between what you can afford. So I think that's honestly the biggest advice there. And again, a big thing is make more money, manage your debt better, right? It's all about this debt to income ratio. And if you're, again, writing off too many things or just spending money on things you shouldn't, or for example, you've got not the best credit score, and that the ante for that's always going up.
Yeah.
right? It used to be 600, now it's 680 with CMHC. So it's really about, like, honestly, all the skills you learned as a business owner. Be a good business owner. Focus on revenue generating activities. Manage your debt better. Be organized. File all your stuff as well. Because if you don't have the right documents, you're not going to get exceptions, right? So all the good skills you learn as an entrepreneur are truly put to the test when you apply for a mortgage. And I think to some degree, it's a good thing.
Got it. So that's really wise words. As an entrepreneur, you always think, I'm going to write off as much as possible. But, you know, when you're making a big purchase like this, you need to work with your accountant very closely and making sure that you can make the numbers work. That's awesome advice.
Totally. Yeah. Thank you.
Cool. Well, hey, Paul, thanks for your time. I'll let you have the
My
final
pleasure.
word.
Sure. Yeah, I mean, final words, obviously, there's a few people on. If you guys have any questions, I mean, this is meant to be interactive as we leverage the social networks. So you guys have any questions, I'll wait a little bit for that. Obviously, if nothing comes to mind right now, or if you see this through the recording, which we'll put on YouTube later, all my info is usually pretty easy to kind of access. Linda, thanks a lot for the kind words. Yeah, connect with me on Level Up Your Mortgages on Instagram. Paul, levelupmortgages.com. There's plenty of ways to do it. But yeah, really stoked to be on this chat. And I think there's so many amazing entrepreneurs coming online now. And it's honestly, it's hard enough to make ends meet. Let's face it, especially during COVID, right? So the last thing I want you is to be stressing about putting, shelter over you. And let's face it, we do this to be free and to own a nice white picket fence house. So if that part of the dream is getting tarnished, it kills your motivation. So just be smart about things. Massive props for you being self-employed and making things work. That's huge. And just use the same skills, again, that you've been using to get the best offer on your mortgage and be able to afford the most.
Amazing. Well, thanks so much for your time, Paul, for joining us today. There's no questions right now, but Paul's easy to reach, and I will be posting this video and it will be available for everyone to watch. So thank you so much for joining us today. See you, Paul.
Thanks so much, guys. Keep leveling up.